Hi traders, 21st of July 2016. I want to talk about tuning the triple moving average crossover system and getting some parameters which work for you for the time frame you're trading. So here we've got a cable hourly chart, so sterling US dollar, and we're running three moving averages, 6 period, a 24 period and a 120 period. What I'm doing here is I'm kind of looking at ways to tune this for this particular hourly chart. So if you went to say a 5, 20 and 100 period moving average, which are fairly default parameters, you can see you're getting quite a lot of entries here. So the system will only give you short entries when the long-term moving average is falling and the short-term moving averages are stacked. You are seeing entries which some of them are good, some of them aren't so good. And again, you've got a long entry here, not in a particularly great place. So if you think about your time periods and your moving averages, you can kind of get a bit more sensible about this. So let's say, for example, we want to make the long-term moving average correspond to a week of hourly data. So if we put 120 hours in there, that's effectively 5 24-hour periods. I'm going to use a 6-hour short-term moving average and a 24-hour medium-term moving average. And I'll apply those changes, and that actually has improved things a little bit. You can see our entries are slightly better. Not going to be perfect. In places where the long-term moving average starts to flatten, this indicates range-bound conditions, and you don't really want to be taking trades where the market starts to become range-bound. But where you've got a decent kind of gradient on your moving average, particularly, not so much here actually. Again, let's just zoom in a little bit here and have a look at these signals. So got a signal here, and there was some downside there, about 30 odd pips of downside with minimal risk, but if you'd stayed in, you'd have got stopped out. Again, this trade here with a signal, you'd have been in around here, and then downside 41 pips, but again spiked back, and you'd have got stopped out if you hadn't cut and run on that. This trade, on the other hand, massively strong. You know, a huge amount of downside there, so 200 pips on the downside for that one. But these are sort of post-Brexit scenarios. These signals are great, providing you set yourself a reasonably comfortable stop loss. You know, there's an awful lot there, 500 odd pips on that one, the same for that one. This one here, getting towards the end of the downside move, little bit of downside, but you need to be careful. There wasn't much to play for there. Here, this next one, not a bad one, 20 odd pips, but again, you know, getting a bit volatile. So if your stop was too tight, you'd have come out. But if you were using, say, 30 pips, 40 pip stops, looking to kind of get at least 1-to-1 risk reward, if not more, you should be on the right side. Again, here you've got a long signal. Here, almost a perfect situation. You'd seen 260 odd pips there, 250 on that second leg. But then once the market starts to consolidate a little bit, this trade here, this signal, actually not bad, 50-60 pips, and this short signal here, again pretty solid, 160 odd pips. So tuning the system with a bit of thought around the time frame you're trading and what the long-term moving average is, in terms of, you know, don't just use an arbitrary figure, just think about what you're doing a little bit. Let's have a look at the daily. So this is using a 5, 10, 200, which is an awfully long time frame for that long period. So if you're looking at a daily basis, maybe it'd be better to look at something like perhaps a 28 period moving average for the long term, and we'll use, say, 2-day for the short period and 5 for our medium-term moving average. Let's change the widths a bit, make this a little bit easier to see. Not so good, I'd say. I don't like the look of that, really. It's just kind of taking us into some choppy sort of trades here. These do work. In fact, they work better than I anticipated. That long signal there. Remember, your signal won't be actually generated at the beginning of the bar open. The signal's generated where the actual MAs cross, and the type of signal will be dependent upon the crossover mode in the interface. So if it's touch, it's when the actual moving average is touch. If it's printed, it's when the moving average is actually print. So if you, not a good signal here particularly, that would have got you stopped out. It's a pretty good one there, with 300 odd pips on the downside. Again there, loads of downside there. That's again post-Brexit. I don't know, I'm not entirely happy about that. I'd be looking to kind of tune those moving averages a bit, although saying that they do work very well on occasion. I mean, this one here is sensational with 765 pips on the downside to that one. So the longer the time frame, the more bacon in the trade, which is always the case in FX. So again, this signal here, 400 and 500 pips or so. See what happens if we use, say, let's go for a 60 period long term, a 14 medium term, and a 7. See what sort of, that's quite interesting. So 60 period long term moving average, that's 60 days, so that's 2 months. So we're getting a nice smooth long term moving average. Medium term moving average 14 days, 2 weeks. And the short term moving average 7 days. And that's giving us what appear to be much better signals, fewer of them, but quality ones. You're not going to get everyone right. That would have got you stopped out there. But this one here, 270 pips. This one again will be about 400 or 500. And in fact, no more, 840. This one here, 580 odd. And when the market gets choppier, yeah, still 220 odd there. This short signal here, yeah, tricky. You need to be careful there, but there was 100 pips downside on that before it rallied back up. So again, if you're using trailing stops on your trades, you should be able to de-risk a potentially profitable position going against you. I hope that helps. That's just a quick overview of a bit of thought behind the moving average periods and the time scales you're trading on.